So we have begun the recording, Stephanie, of our session on January 6th, 2016, in which you and I are going to chat about, what did we say? Oh yeah, first-time home buyer.
First-time home buyer.
And try to provide a little bit of insight into people that might find themselves in that position, things to look out for, things to be certain to consider, I suppose. And how would you start that conversation off? What in your mind is important from a first-time home buyer standpoint?
First-time home buyers, I personally like to know that they're pre-approved and ready to go.
Okay. Worst
thing that can happen to a first-time home buyer is to fall in love with a home they can't afford. And then that home will always be the bar that they can never get to if they don't know what their affordability is. So that's where your job, if in a first-time home buyer especially, is first and foremost, even though my job is more exciting.
So, I mean, in that situation, is there kind of a knock-on effect if I fell in love with this house and now I can't get it to, does that somehow impact you, the realtor? Do I sort of see you as being part of my problem, or not at least being part of my solution? Or
generally not part of the problem, but it definitely becomes a barrier to find me something like this in my affordability range, which in some cases can be impossible. Right.
Now, the first-time home buyers realize that pre-approval doesn't really mean they're fully approved.
No, that's the problem. They go to the bank and think the bank is the be-all, end-all, and I always make sure that they get a credit check pulled at the bank and get those things found, because I've had more than one first-time home buyer have the bank tell them they're approved, and then they find out when they go through the actual process that they're not approved and they're not even ready. So I always ask people, to get their pre-approval from a mortgage broker and get it pulled. And you can talk more about what you do in that process. But even if they're not quite ready yet, I've talked to a lot of people who, know they want to buy but don't have a down payment. And even referring them to you at that point is good, because you can tell them how to get their credit ready. Right. So when you have that meeting with someone who's a first-time buyer, what are you looking for?
Well, I guess from my standpoint, the thing that, how will I say this? It's almost as though I want to avoid the immediate question of what rate can I get? While it's a good question, when it gets posed right up front, because it's as though that's the only question the first-time home buyer thinks they really need to contend with, it's just not in the right spot, because there are other considerations before that. So credit check being one of them, certainly. And if they're not credit worthy, I mean, they're just going to have a devil of a time finding, certainly at a chartered bank, you probably won't find a mortgage. And the lower that credit rating, of course, the higher the risks they're presumed to be, and the higher likelihood of a high interest rate. And of course, as a young person, good chance I can't afford a high interest rate. Right? So for me, while I think it's also a good idea to get a pre-approval, people need to understand that, okay, we've looked at you, the individual, and yes, we've looked at your credit rating, we've looked at your income, your employment, and those things look good. So you're quote unquote pre-approved. I think that terminology causes us to think, oh, well, if I'm pre-approved, now I just need to find a house and here's the money. When in fact, it's pre-approval kind of in quotation marks, because you're really not approved until the bank or the lender, let's use that term, can marry up not only you, the individual, and your ability to pay based on income and job security, et cetera, but what is it you're intending to buy?
Right.
It's that property that's the collateral for the lender. And until they know the house you've chosen, they don't have a way of being able to say, well, we're ready to, Shan, can you see? We're ready to lend you this amount of money, but if the house only has a market value of that, you've got to pull in your horns.
Yeah, and it's a bit of a catch-22, because a first-time buyer is generally in a very competitive price range. So they need to have a number narrowed down so they can look with confidence. Right. And the last thing you want to do is not know your number, try to offer on a $300,000 house who can only afford up to $270,000. You're then scrambling to get that $30,000 from somewhere else, if that's the magical house.
Right. And certainly, even without a house in mind, knowing their income, knowing what their current debt situation is and what their debt load is, we can certainly come up with, here is the number that you can't exceed. Drive those two ratios that all the lenders are going to be looking at, the gross debt service level and then the total debt service level. And that's the GDS, as it's referred to, is driven by principal and interest payments, taxes, and your heating bill. And you simply take the sum of that, say on a monthly basis, divided by your monthly income. And as long as you're under 39%, typically, that's a good thing.
Right.
Then they'll add the second ratio. They take the number from the first, the numerator. So again, principal, interest, tax, heating, and then any other debts you have. So whether you're paying for a car, you've got a monthly, on average, X number of dollar bill with your credit cards, that gets loaded into the debt servicing, still being handled by the same amount of income. Well, that ratio can be a little bit higher, and typically it's 42, 44% in that range. So right out of the box, we can tell a first-time home buyer that your income based on your current other debts will handle this amount of additional debt in the form of a mortgage. Don't go beyond it. So don't set your sights on a house that's, $50,000, $60,000, $70,000 higher.
Right. I think another good tip is to make sure they don't spend that extra money. Say they're approved for $300 and buy a house for $270. I find a lot of people get very excited about their approval amount and will do things like buy new furniture for their home, get possibly a new bathroom or something at Home Depot before they even move into the house.
Right.
Purchase a car, wherever they can with that extra bit of money, and that extra at the very last minute can stop their whole mortgage in the end. So to save on those purchases until you've actually got the keys is important.
I think that's a really good piece of advice, to suddenly think that you're locked in and you've got this extra whatever amount that I can run out and do these other things. You can't forget there's some other expenses associated with buying the house. You need coverage for another probably several $1,000s anyway. When we look at, maybe there's an appraisal cost, maybe there is, of course, a legal expense. So you can't be oblivious to this. So it's prudent advice, certainly, not to run out and overspend. And maybe, another thing that kind of fits into the same topic is, well, perhaps as a first-time home buyer, I don't quite have enough money, but I know I can borrow, I'm going to use that term, from my parents.
Yes.
And, I've learned that the language is a gift.
Yes.
Oh, that's okay. I'll get a gift from my parents, and it's kind of a wink, wink, nudge, nudge kind of thing.
Yes.
And what I think a lot of people don't realize is just the amount of scrutiny that exists from the lenders around this word, what starts with an F, ends with a D. Oh yeah, fraud. And, a gift really has to be just that. It has to be a gift. I'm not paying it back.
Yes.
So that first-time home buyer can't think, oh yeah, mom and dad are going to fork over, pick a number, $10,000 or $20,000, and over the next 2 or 3 years I'll pay them back. Well, the first-time home buyer needs to realize that the lender has loaned money in the form of this mortgage, but you really have some additional debt that you didn't declare if you're planning on paying it back. So you're deceiving the lender.
For sure. And that's why we find a lot of people in the spring market who are actually first-time buyers because they've received their gifts for Christmas.
Okay.
Right? In lieu of, we see a lot of people, first-time buyers do a lot of searching right after Christmas and also right after tax season once they get their tax returns.
Okay.
Been investing heavily into their RSPs so they can use their first-time buyer's credit there and they're going to go ahead with that. And maybe you could explain how to use those RSPs as a first-time buyer and what the repercussions are of that would be good.
Yeah, well, at this point, the government is, $25,000 that you can tap into your RRSP without any penalty if it's your first home. And, there's some very relaxed requirements in terms of paying that back. I think it's over a 2 to 5 year period of time.
Now, is that per person or per couple? Depends on who's buying the home, right?
Well, I think it's per person. Certainly on the buying of the house, if I've never owned the house, but you have, if the house is in my name, then I qualify for taking that money out. But if you've owned a house before, as have I, neither one of us qualify.
And is there a time limit in between there? If you say bought a home, sold it, got divorced, whatever, started renting for a while, are you allowed to go back into that?
Yeah, I think there is. I'd have to look that up to verify that, but I think there's maybe a 5-year gap that exists between, the time you sold your other house and you're now deemed to be a first-time buyer again.
Right. Because I think getting the down payments where first-time buyers struggle the most. So obviously a gift is an option, and using your RSPs, and obviously just saving. And I think speaking to a mortgage broker before even you're quite ready is good, so that you can tell someone how to improve their credit. Maybe they haven't run a credit check. They have no idea what they have. You guys had lots of tips on how to improve things, maybe using a credit card that you've never used before.
Yeah, and I think, well, the point you just made is a good one in terms of not being afraid to come in and talk to somebody about a mortgage, even though you may not have an intention to do anything for 6 or 12 months, just to kind of get a general understanding. And then if it opens up a conversation about things I can do to improve, let's say, my credit rating, and certainly in the case of the credit card, you really need to have 2 of them, and they have to have been active. And that's not to say you go out and spend thousands of dollars on each one. They can be very modest expenditures, but they're looking to see that you're able to handle credit. And those 2 lines, are deemed to be sufficient evidence of your ability, if you're paying them off every month and not showing any delinquency in payment. Those are all positive things and help improve your credit rating. Good.
That's good tips to help people out for sure.
Yeah, and we can all go out and get a copy of our credit rating. It doesn't cost us anything. You can get a copy of it by mail. People in the financial institution, we can get them, but in terms of actually processing the mortgage, they've got a best before date. So the lender likes to see one that's been pulled in the last 30 days. And one of the things we want to avoid, because this actually negatively impacts your credit rating, is a frequent pulling of that credit rating by somebody other than yourself.
Which is why you would go to one mortgage broker and not 4 different mortgage brokers, because they're all pulling the same report.
Right. Yeah. I mean, the credit rating is the credit rating. Now, for instance, if I pull it, I can't give it to you. It's something that I get through the brokerage firm. I can give you information. I just can't give you a copy of it. But if you're not, running out there and buying that car or that room full of furniture and impacting your credit rating between the time you get approved and the time you actually move into the house, you're not impacting credit, and things are fine.
And how long do you think it would take for someone to repair their credit if they had gotten into delinquency or something along those lines?
Well, it depends on what it was. Bankruptcy, 2+ years. Somebody that's maybe abused a credit card, it's going to take the better part of 6 months. But, it can be repaired. Now, we don't have a simple absolute value on our credit score that determines whether or not we qualify. And you can have a credit score, recognizing that they go up to a high of 900. And typically the lenders are looking for something 680 and above is deemed a good credit score. So, if you have 700, you don't have to feel badly about that I'm 200 points below the max. I've yet to see one as high as that. I've seen a couple around 800, which is stellar. But 680 and above is deemed to be very good. You can certainly find lenders out there that are prepared to lend money at 540 and above.
Sure. For the right rate, they'll lend anything, right?
For the right rate is correct.
Yeah.
For some people, and that's part of the, the search process, I suppose. For some of us that have fallen upon some difficult situations that we're working through, you may find that by going to the chartered banks, they're going to turn their back on you because you're too large a credit risk for them. But that's not to say that there aren't other opportunities.
And I think something that's relevant right now, especially with the rate changing possibly tomorrow or thereafter, is locking in rates as well. So that's important to tell first-time buyers, any buyers, about locking in a rate and what that does for them.
Well, that's true. That's part of the reason why I said at the outset that for me, somebody that wants to get right to, well, what is the rate? That's a difficult question to answer without having a little better understanding what somebody's trying to achieve. Are you interested in a 25-year amortization, for instance, a 30-year, possibly a 35-year? I mean, what really is it that you're trying to achieve? Pardon me, recognizing that mortgages have the ability to have prepayment made on them, and typically 10, 15, 20% a year can be paid off on the balance on the anniversary date, and typically similar percentages can be added to your monthly payments. So you might, for instance, as a first-time home buyer, say, geez, it'd be really important to me if I could lower my monthly payment, but I have these periodic, maybe I get a performance payment once a year, or, we might call it a bonus, maybe it's a profit sharing kind of check, and once a year I could afford to throw some money at my mortgage. Well, you might decide that 35 years looks really attractive because it keeps more money in my pocket for a period of time. And then when I have these periodic blips in incremental income, I can throw it at the mortgage. So it really doesn't mean that I'm necessarily going to be 35 years before this is paid off. Right?
Right, sure. You can get it done quicker, obviously, which is what everybody wants to have done, right?
Well, I understand I want to have it paid off quicker. But I think you need to look at it in terms of what is it I'm trying to get accomplished in my financial life. None of us can predict the future,
sure,
right? One of those things that I find interesting, particularly if you want to lock in, you're going to go with a fixed rate, right? Well, 65% of Canadians, or a number like that, come out of a 5-year fixed mortgage on average in 3 years. Mm-hmm. Okay. Well, fixed mortgages at 5-year period of time have these things called prepayment penalties. The bank counted on, or the lender counted on, making so much amount of money from each mortgagee. And if you come out early, you're depriving, me as the lender of that opportunity to get the return that I thought I was going to get by contract with you. So I'm going to charge you a penalty.
So it's important when we speak with you, obviously, is to make sure they let you know what their goals are. Maybe this is their 2-year home. Maybe their roommates buying a home together, and maybe a 5-year fix doesn't work out so well for them. So when someone's buying their first home or any home, they need to tell you what their plan would be. Very helpful.
I mean, this person, I'm not that happy with my job, frankly, and there's a good chance I'll be moving because I'll be looking for employment elsewhere. Or, gee, my wife and I are thinking of starting a family, and the house we can afford today won't be big enough for our needs, 4 years from now or something like that.
Right.
All that factors into the conversation.
Sure.
So simply to jump to what's my best rate may not give the person the best product.
Yes.
So I
get the same question. What's the cheapest house I can buy?
Yeah.
Well, I can sell you a mobile and it'll be $30,000. That's the cheapest place you can live. But is that
right.
where you want to live? Is that what you're looking for?
Right. And then what might be the associated costs, right?
Right.
So if you put somebody into the least expensive house, what might they expect in the way of maintenance on that property? What's going to be the resale opportunity for them down the road?
Right. Yeah, we definitely, when we're looking for a home, I discuss how handy is somebody, where is it located, do you have assistance, right? The last thing I want to do is sell a single girl a 100-year-old home where she can't do any of the own work on her own. Like if she can't take care of a plumbing issue, or she needs to call someone and her parents are 4 hours away, maybe that's not the first home for you. Maybe a condo is better.
Right. Yeah. No, so this is anecdotal. I don't have evidence to prove this, but it certainly seems to me that a lot of people go into the home buying activity, I'm going to say almost with blinders on. perhaps they don't understand the questions they should be asking the realtor, nor do they understand the ins and outs that are associated with a mortgage.
And I get it. When you're a first-time home buyer, they are the most excited buyers, and I love working with them. They see everything is so glitzy and glittery, and this is amazing. And I always tell people up front, I'm used to this, right? I'm a negative Nelly. I'm going to walk through a house and tell you what's wrong with it.
Right.
I'm going to tell you why it's still for sale. I'm going to tell you, why it's this price. It's easy for someone to pick out that they love the hardwood floors and this paint color works perfect for me. But it's not so easy when they go down and look at how old the furnace is, that the roof needs to be replaced, whatever the situation might be, knob and tube wiring, galvanized pipe. There's all kinds of hidden things that people don't think about. And as a first-time buyer, they don't know about those items. They've never come across it. Yeah. So for me, I'm the one to point those out, and I may not be some people's best friend when we're looking, because I squash a bit of those happy dreams on a house. But in the end, I know they're always going to find one that makes them happy. I've lost homes myself that we've gone to buy when we first looked. We put in 3 different offers on homes I loved, and lost them all, either for home inspection, my dad squashed the dream, those kinds of things.
I wonder if it would be helpful for you to give everybody that you are helping to find a house a copy of the movie The Money Pit.
We do love that movie.
It's a requirement that you watch this before we finish the process we've engaged in.
That's right. Yeah, we live in background of myself, we live in a 100-year-old home ourselves, built pre-1914. So we're unsure of the year, but it's definitely 100 plus right now. And it's been an adventure. I love what we've done to our home. Would I do it again? Never.
Right. Yeah.
So I always try to talk to people like I'm fully aware of what happens when you open up a wall and it's completely unexpected. So I try to tell people that, especially first-time buyers, because they have that, sure, we can dig out this basement mentality. I had that thought. I said to my dad, oh, the basement's a little short. I'm going to need the basement space. So we'll just spend a summer digging it out. That's a first-time buyer mentality. I would never let someone buy a house with that thought now, but I almost did it myself when we first started. I wasn't in real estate then, and we were excited.
Yeah. Well, and you want it to be an exciting process, right?
Yeah.
It's
your only stressless buying situation, because in every other situation, most often, you have a home to sell and you need to find a perfect home. Right. You could be homeless if you sell this house first, or you could lose the house of your dreams if you haven't sold your place. Right. So there's always the stress in between, and first-time buyers are the most excited, and as they should be. They should enjoy the process. Sure. And never buy the first house you see. I see all the time, they're so excited to buy anything. They buy the first thing that comes along. Kiss a couple frogs. Get on with your day and buy something that's perfect in the end.
What do they say when you tell them that?
They always laugh. I'm like, I love looking at trashed homes. I love it. It's fantastic to walk through a house and see people's expectations and see the pictures that look so amazing online. We go through and I'm like, I knew exactly what this was when we walked into it. But they're surprised, and it's not what they expected. And I just tell them, hey, it's part of the process. Possibly it's your price range, possibly it's your expectations. And eventually those expectations and price range come together.
So out of curiosity, and I know we want to wrap this up very soon, out of curiosity, from your standpoint, we got talking before we turned the recording on, I think, about value propositions. Mm-hmm. So what would you say your value proposition is for that first-time home buyer?
My value is I've been there, right? So I've been that, bright-eyed, bushy-tailed first-time buyer, so excited to buy anything that comes down the road. So I'm fairly handy not that I do a lot of it myself, but I'm pretty aware of what's there. My dad has taught me very well on how to check furnaces, check for pipes, check electrical. I do a bit of extra in the walkthrough with somebody, right? I have an electrical tester. I have a trusty marble. You'd be surprised what a marble can find out for you in a house. And you're like, I think the floor is off. I'm like, well, let me just check. I'll get my marble out. It'll tell you.
Yeah, I was thinking you were going to something that was non-level.
Yeah. that happens very often. You look at houses that go like this in the middle of the floor.
Right.
They exist, and now those are problems that are bigger than I don't like the flooring. You know, you can't just put new flooring down and fix that problem. You need to do the structure, and you know, those are things that people don't want to get involved in, right? So I think a lot of my value is in pointing them out and being completely honest. Because when they come to me to buy a house, it's not that they're going to buy that particular house. I actually don't care which house they buy. They're going to buy something, and I want them to be happy in it in the end. Right.
Well, and I think that's, I mean, at the end of the day, that's what we're trying to achieve, right?
Yeah. I'm not like those real estate shows where they show you 3 houses and make you pick one. The most I've ever showed to someone was 63 houses. It was a process. But I'm completely willing to take the time to be patient and find something. I'm not going to force you into buying a house.
Right. Well, and nor should you, right? I mean, your focus clearly is on the client.
Right.
Well, that's good.
But a lot of people don't feel that way, so it's different. Well,
you know, maybe those people are not in business for as long as you either, not as successful as you are. So I'm going to pause the recording, Stephanie.
Okay.